a regular guest of ours. It's Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle, thanks a lot for joining us. As you can imagine, in this country, the threat of tariffs as early as tomorrow, very steep tariffs as early as tomorrow, is a big talking point with respect to the future of the Canadian economy. You've also looked at that scenario from a more market-oriented point of view. What kind of moves in markets might we see if those tariffs become a reality?
Well, for one, we'll have to see what kind of retaliatory impact it has, what Canada does and what Mexico does. We already know Mexico has been making threats.
Okay, we have our connection, as you can see, is seized up. We're going to work on returning to Michelle Schneider. There is an early look at markets. I'm going to get you a quick look at, okay, I'm told Michelle is good right now, so we'll go back.
Okay, it's not my end, it's yours.
Michelle, we had an interruption in our video feed, but you're back with us now. Continue with your thoughts on the tariff situation and the economic and market consequences potentially.
Okay, well, all right. So basically what we know about this year is that headlines will be fast and furious. And these tariffs could be more of a negotiating point because we've seen that in the prior Trump administration. There are some people who believe tariffs are going to be inflationary, others who think it's going to be a positive for the United States. So that's where we have to follow price. And what we're seeing now is an immediate impact on some of the commodities prices that were starting to go up. Car prices could be impacted, oil prices could be impacted. So we don't really know yet what the impact is going to be, how far he's going to go, and as I was starting to say before, what sort of retaliatory impact it will have, what Canada might do and what Mexico might do. So I'd say there's a huge unknown. Nobody loves the idea of tariffs. We obviously saw in our trade deficit this week that we like cheap goods in this country. So it'll be interesting to see how it all passes through.
Okay, let's pivot to gold. Gold has broken into fresh record high territory. I believe yesterday it made that move. You remain constructive on gold. You think $3,000 gold is coming?
Absolutely. If you look at gold over the last few years, it's just been in a tremendous uptrend. It goes up, it consolidates, goes up, consolidates, and we haven't seen any reason to believe there's a reversal to that. That's in terms of the technicals. In terms of the fundamentals, it is definitely a flight to safety and at some point could switch more to an inflationary hedge, and that's why we're also watching the price of silver and the gold miners.
You see value in the mining stocks. You think those stocks have underperformed the metals themselves?
Again, if you look at the ratio of the performance of the miners versus gold, it was at historical lows. That's usually when I get interested. But on top of that, we've seen the gold miners make a nice move this past week. And so basically you have to say, what are the implications? Number one, obviously, is risk on in the market. That helps the miners. But number two is if gold is really being stretched and will continue to be accumulated, then the mining stocks will have to perform because that's what produces and distributes the actual gold itself. So yeah, we like GDX, we like the breakout this week, we like the follow through, and we think that can have a lot more upside.
So GDX, the Van Eck Gold Miners ETF, is one of your picks. Another one is Novo Nordisk, a company that's pretty well known in the market these days for its weight loss drugs, and it is developing a new generation of weight loss treatments.
And also they just found out that it's good for kidney disease as well. So that was a plus. The trial on that got a big thumbs up. But essentially, it's still very beaten up if you look at the chart of it. It went down to about 80 and then gapped up on the first news of a new weight loss drug that might be cheaper. And it's been sitting here. So I think it could be an interesting opportunity you didn't certainly miss the boat if it's something that you wanted to get into. Let's put it that way. We like it now if it could get back over like 85, 86. We think that means it's going to start another leg up.
Okay, let's finish with AbbVie. That's your third pick today.
Well, I'm actually, it came in much higher today. Because of their prediction for 2025 is that they're going to make a lot more money. They're making more money in the immunology space, which of course is what AbbVie does primarily, and it's also a dividend-paying company. I also liked it because of Allergan, which is their Botox, which of course for the vanity trade that I know you and I have talked about on the show, I think could benefit. So right now it just gapped up tremendously. I'd like to see a little bit of a dip here for risk control, but I love the action today, and I wish it would have happened after the market opened instead of before.
Michelle, thank you so much for joining us. As always, Michelle Schneider is Chief Strategist at Market Gauge. Yesterday on Market Call, we were